All right, welcome everyone. Welcome to another Thursday afternoon. Hope you're having a wonderful day and an even awesomer week and month. We are March 4th, 2021, coming to you live from Mexico, but we actually moved, and I'm going to show you my non-virtual background. Look at that. Woo! How awesome is that? Straight from Acapulco, Mexico. We landed just on Sunday and we are going to be spending the next couple of weeks here for sure. Did you take a look at that view? It is amazing. We're so happy with this accommodation. And we're actually going to be hosting our next masterclass directly from here. So apologize for that big glare. There's so bright right now. I'm 6 p.m. My time right now. But anyways, I wanted to share that with you because Jeannie and I are super happy, super excited to share that with you and also share you the roadmap on how to get here as well through US Real Estate. You got it. So let us begin. Let me share my screen. I'm going to welcome you all. So we've got quite a bit on the Zoom call today. Nice to see you. Just a couple off the top here. We have Bill, Brett, Francois, Heather, Lepika, Sayed, Terrence, Trina, and so on, and still more people trickling in right now. So that's wonderful. Nice to have you all here. We also have our extended Facebook family through our Facebook page and group. So thank you for joining us. Let us begin. Today, we are going to go into another multifamily opportunity. And so if it's your first time to our JK Deal Reveal, let me explain to you a little bit what this is all about. This is an opportunity to be able to quickly filter the garbage from the gold. It doesn't make sense for us to spend half an hour, a day, a week looking at a property that might just not fit the numbers, not meet some basic criteria. We can do a very quick and dirty assessment of a potential deal in minutes. And from that quick and dirty, jump in there, pick up the phone, send an email, and get immediately into a negotiation, which starts with a rapport building exercise. So we can get right into the negotiation after only a couple minutes looking into a deal. And this is JK Deal Reveal. These capsules are made to show you exactly how to do it so that you're not spending hours and hours and days and weeks and months and years sometimes before even picking up the phone. Because knowledge is wonderful, but it's nothing if you don't attach some action to it. So this is giving you what you need to take action quickly. So we are getting excited because today we're going to take a look at a 24-unit apartment building in Detroit, and the purchase price is $700,000. So tell me, would a 24-unit apartment building for under $1 million, does that sound like a deal or no deal? So we are getting excited because we're going to be analyzing this deal lightning fast. And we are excited as well because we are looking not necessarily in our backyard in Toronto, in Vancouver, in Ottawa, Montreal. We are looking at a market that is fairly easy to find deals that are 4 times better in cash flow than in Canada. We're investing where the numbers make sense. So today, let's jump in. I'll remind you that this is an interactive as much as we can with one direction. By the end of the next couple of minutes, I'm going to ask you, is this a deal or is this no deal? So in the chat or in the Facebook comment area, you go ahead and type in if you think this is a deal or no deal. So some of you might already be popping in there. 24 units, $700,000. Let me know if this is sounding like a deal up front or not. All right, so let's get this party started. So I always do that. I'm gonna share my screen again. There we go. So the very first thing is I wanna see where this property is located, and I wanna get a sense for the crime in that area. Because most likely one of your investing criteria is I don't want to go investing in the hood, in the slums, et cetera, et cetera. So I go to Trulia and I type in the address of the property, And I am also going to copy paste the format that Trulio has for the address. I look at the picture, pretty nice facade. It has nice curb appeal here. And I'm going to go to the crime, and I already see that it is a low crime area. Low, so from lowest, low, medium, or yeah, medium, high, and highest. We're in the low, so we're on the lower end of the scale, surrounded by other low and mediums and some highs, and the highest are pretty far away. But you'll notice if you just scroll in a little bit here that it's actually in this nice little secluded square. So all in all, this certainly doesn't scare me when it comes to crime. So I'm just gonna put that in the back of my mind that there is some crime in here. I mean, it is a big city like Detroit, so crime is to be expected. And this is certainly not in the high or highest area. So whatever that means for you, take it from there. Okay, so next thing I want to take a look at is I want to figure out what the value of this building is today. Okay, this is a 5+ unit asset. And so the value of it is determined by the net income that it generates in 1 year, the NOI. And so I just so happen to have this profit and loss statement, this summary that the seller provided. And they're advertising this property for $700,000, 24 units, as a 13.74 ROI, a 13.74 cap rate. That's what they're advertising this as. So who says this is a deal? Who would be overjoyed to buy a 13.7% cap apartment building, 24 units? So let's blow up the chat here. We got some hands raised. Excellent. So Bill is saying, yeah, we're basically at 30,000 a unit. That's a deal. Trina would be in. Fantastic. So very good. So it's looking good. It's looking promising. But remember, we trust but verify. So now we're going to dive in a little bit more. So it's saying, yes, it's 24 units, but there's only 18 that are actually occupied right now. So right now I'm thinking, is that a 13.74 actual ROI or pro forma? Is that the return I'm going to get once it's fully occupied, or is that what it's doing right now? The seller's job is to present the deal in the very best light possible. Our job as the buyer is to buy the very best deal today. So just keep in mind that there's going to be a little bit of a clash in most cases. So let's take a look real quick at these numbers here. So we have our 24 units, and you see that some of the units have a monthly rent, and then there's a potential rent where all of the units are identified for a total of $13,800 total rent if the property was fully occupied. And then they put in a 10% management, which I like. That's nice and conservative. That's okay. The insurance for this building is $912 a month. So multiply that by 12, and we're around the $10,000, $12,000 range. So that's reasonable. I'd even say it might be a little high. So there might be a little bit of optimization to be done there. The water bill at $50 a month per unit, I think that's a little low, but it's not crazy low. Gas, we're at $500 a year, but you'll notice it's for the common area, so it's possible that that number is truthful. Electricity, $300, trash $150. Trash $150 a year. I'd like to know what's happening with the trash here. This is 24 units, and there's most likely a dumpster or 3 in the back. And if there is, it's not $150 a year. So I'd like to know what's happening there. Same with the yard and snow maintenance. 24 units has yard and snow for $100 a year. Something's happening. We need to figure out. So there's 2 things that are warning. 3, if you consider that they are actually taking the pro forma rent as their number. So let us make sure, let's see what they're doing here. So I'm going to pull up my trusty calculator, and I'm going to type in, I want to see how they're getting up to $96,000 a year of net cash flow. So most likely they're taking their pro forma rental income, and they are subtracting, this is a monthly pro forma rental income, and then they're subtracting the management, they're subtracting the insurance, they're subtracting the utilities, so the water, and then see here, I don't know how they're adding this up, but I'm going to put in 500. Oh yeah, these are monthly income, so I might have misread in just a moment ago, but nonetheless, I'm just going to add up their numbers to see where we land. That's exactly what they're doing. So they're taking the pro forma rental income, they're subtracting the expenses, which obviously we'll need to verify down the line. They come up with a total net cash flow of $8,000 a year, which then comes up to $96,000 a year net. $8,000 a month, $96,000 a year. And then they take their yearly income and they're dividing by their asking price to get their 13.7. Okay, so now we know for sure that they are advertising this as a pro forma. This is 13.74 as a pro forma rental income. Let's take the actual rental income. Okay, so I'm going to redo the same exercise, but this time I'm going to take the actual income, which is 11,000, and I'm going to subtract the management. I'm going to subtract the insurance. I'm going to subtract the water, the gas, the electricity, the trash, the property taxes, and I get 5,367. Okay, 5,367. So that would be per month. Per year, I have 64,404. You see, there's a really big difference here. And we divided by the purchase price. I hope I didn't do a mistake in the numbers, but this would actually, actual number is a 9.2 cap. We're pretty far from a 13.7, wouldn't you agree? And so this, I want to remind you that I did it the long way here. I went through all of our summit, right? So I went shit, you know, I didn't really put a shit budget in here, but I went through utilities, I went through maintenance, management, utilities, insurance, and taxes. So they didn't forget one of the big categories. They were all there, except for shit, but that's our own buffers. And I went through it. That was the long way to get to the summit. I'll remind you the fast way to get to the summit, and that's with the quick rule of thumb. So if you have the gross, the income that it generates, that was per month, right? You'll notice that their total actual income is 11,060. There's 12 months a year. So gross income, this building today is generating $132,000. Quick rule of thumb, if the owner pays for all utilities, which they're certainly paying for water, gas, electric, they're certainly paying for trash. So it's sounding like utilities are split between owners and tenants, yet to be confirmed. So I'm just going to take that the utilities are split between owner and tenants. If owner pays for all utilities, I will have a higher expense ratio, so I'm going to take 0.5 as my multiplier. And if the tenants paid for all utilities, I would take a smaller expense ratio and or a multiplicative factor of 0.6. But since I'm split, the quick trick is 0.55. So I'm expecting, with the quick trick, to make about $73,000 a year on this building net, and they're asking $700,000 at a 10.4 cap. So you'll notice that how much more time did it take me to analyze it the long way versus the short way to get the difference between a 9.2 and a 10.4 cap. I'm at a 1% cap difference. Yes, it matters, but does it matter enough to slow you down to a point of getting stuck in analysis paralysis? You know it's about a 10, it's a 9.2, it's a 10, it's about a 10, all right? Pick up the phone and work with the objective that this is a 10. So real quickly, that's what I wanted to show you today. So the real question is, are you comfortable jumping into an approximately a 10 cap apartment building that does have upside because these tenants, these units are vacant? And if you put a little bit of sweat equity and it's a little bit of a project, if you go in there and push it up to a 13.7. Are those numbers good enough for you? All right. So that is that. So the next small little thing I wanted to do is do the reverse engineer, because this is really a useful calculation. This is currently about a 10.4, between a 9.2, 10.4. That's where the range we're in. So does that meet your investment criteria? Maybe not. Maybe you only invest in true 12 caps. So what is the offer price that you need to get this property for to buy it at a 12 cap? It's very simple. Once you get your NOI, how much this building generates net in 1 year. So in this example, with my quick trick, I had 73,000. So I'm just going to redo my round numbers. If this building generates 73,000 net after all expenses, but not the mortgage, all expenses, not the mortgage, you divide by your desired cap rate. So if you invest in 12 caps for this type of an asset class, you would have to get this property under contract for 608,333. So you divide your NOI by the cap rate that you want to attain. And then you might want to offer lower than that so that you have some negotiation room to get back up to 608,000. So we are buying here a 10 cap approximately with some upside up to a 14 cap. I highly recommend you go look into Rentometer as well to see if those rents, actual and pro forma, are actually realistic. That's a good first place to go. And other than that, you go to your property manager or some local realtors or property managers to get some insight on what the market rents would be for this type of an asset in this area with this number of bedrooms, et cetera, et cetera. But we know what we're getting into up front. So tell me, of these numbers, is this a deal or no deal? Meaning, is this worth picking up the phone or sending in an email to schedule a phone call with this seller? Let me know right now. Is this a potential deal, or do we just scrap it right out the gate? We spent a couple minutes and we're done. We're not interested. Let me know right now. Okay, Bill says, of course, a deal. Syed, deal if the numbers are true. Fantastic. Trust but verify. This is so crucial, Syed, that if they're true, we can't stop from having a conversation because we'll never know if they're true up front. We need to get far enough in the negotiation, in the conversation, to lock it up, get it under contract, and then verify. If we're trying to verify everything before it's under contract, chances are you're going to lose it to someone who's faster than you. And that's the point of these deal reveals, to jump in ASAP. So Cash says, let's buy it. Terrence says 39 Kia unit. We went through pro forma. Bill says it meets the 1% rule. It certainly does in this case. Syed says it's a deal at 575,000. Wonderful. So you want a little bit better than a 12 cap. That's perfectly fine. Get the seller on the phone and let's close. Fantastic. So I would agree with you. I would agree with you all. This is a real deal, by the way, that we put an offer on just last week. And it was from the same seller that's selling us another building that we featured on the deal reveal a couple of weeks back, the 18-unit apartment building, which was a 15 cap, I'll remind you. After rapport building and negotiations, we got that 15 cap, got it under contract, and now they know we're serious, we're in it, so they're starting to feed us more and more deals. But they send us something that's, doesn't meet the standard of the first deal, so the numbers are the numbers. So we put an offer in the low 600s to get the ball rolling. So hopefully this was pleasant for you and you learned a thing or two. So just in a couple of minutes, we got a sense of if this was a deal or no deal to pick it up and run with it. And so that's it. Hopefully you enjoyed. I'm going to invite you to our next free hour-long training, which is going to be on March 25th. And we're going to present to you an opportunity to join us at our next masterclass, which is a full weekend event. And we have a whole bunch of bonuses that's coming with that seat at the masterclass. We have a pre-masterclass training on the financial freedom basics and how real estate plays into that. And even after the weekend, we have another training for you, which is our advanced negotiation techniques. And we are giving you 6 months of JK Deal Reveal compiled together. So you can fast track through all this and get a whole bunch of quick exposure to looking at deals and getting ready to pick up the phone and place offers, as well as the last 12 months, the full cycle of JK's free training curriculum. Those are full hour-long trainings times 12. I don't even have enough fingers to point to 12. There we go. Something like that. And you will get our 5-week boot camp, which is a weekly curriculum on how to close your deals fast, right? These are the steps, these are the numbers, these are the targets of your action plan to get properties under contract and get properties closed as quickly as possible. Yes, there's some elbow grease required, but that's the thing. We have to feed the machine if the machine's going to feed us. So hopefully you'll get to join us at our next masterclass. If you're interested, you have the link, n4t.club/free training. That'll get you to the presentation, to the opportunity. And if you want us to feature your deal on a JK Deal Reveal, just send us an email. Go to our website, put in the contact us form the property's address and any information you'd like us to have. And I'm going to go in there blind as though this was the first time I saw the deal. And you'll see that in a couple minutes, I'm ready to pick up the phone, have a conversation, build a relationship, and most likely put in an offer right then and there. So I'm going to wish you a wonderful evening. And for those of you who are part of the Now for Tomorrow Club, I'll see you in just over half an hour, sending you lots of love and reminding you to do now for tomorrow for that lifestyle you deserve. Take care, everyone.